I got one for you today. So we started the week yesterday. We had our coaching mastermind group. And by the way, for those of you guys who are in coaching, we did have our mastermind group last night. So make sure that you go grab that recording over on Tackle's website. But we started the discussion on entries and really defining those entry rules, because a lot of us kind of we have the basics. Okay, I'll use the ATR, I'll use this, but really going down and identifying the trend, and then your setups, and then your triggers, right? So I really want to talk about triggers right now.
Yeah.
Give me CHK.
A little stock report.
Yeah.
Pick this week.
From this week. So, and I like to keep things simple. I don't have time to go scan the markets. I'm a busy person. So I just go in, in our options report or stock reports and find whatever I need and just, get in there and analyze the stock, right? So here we are. So if we pretend that, we don't have, yesterday's candle and today's candle, and we're looking at Friday's candle, because the analysis on the stock report was off of Friday's candle, right? Yeah. So looking at that and we're waiting for that breakout. You can clearly see that breakout happening. Give me that epic pen and draw me that breakout line.
I will get you that breakout line. Give me 1 second.
And so as you're getting the epic pen out, we're talking about, all right, entry, right? So everybody has their own entry rules, trigger point. So if we use standard step system, we'll take 10% of the ATR above Friday's high, and that's our trigger. Boom, we're in, right?
Yeah.
So I was traveling yesterday, so I missed that trigger. But I kind of got, a second chance on this today, right? Because we got the peekaboo, like I'm breaking out, and then it goes, just kidding, and right back into that resistance level. So if you go on an intraday time frame for me, if you would give me a 15-minute. So now here we are, same trend line that you drew on the epic pen there, right around 90.5 would have been that resistance level before we had the breakout. So now I'm going back, and if you can give me maybe a few days back a little bit too, so we can kind of see Thursday candle, there we go. So that trend line is right there, like right above 90.5 or so. So now that we had the breakout yesterday, and then it's back inside that resistance level. If I wasn't triggered into the trade yesterday and I'm looking to enter this, where am I getting in? Am I getting in at that all-time high at 91.80, or can I still use that same resistance line? Can I scale in at the original resistance line and then add when it's above 91.80? Those are your trigger questions, right? What do you do? How do you really define that entry? Talk to me.
A couple things. Number one, if you did aggressively trigger yesterday, let's talk about that first scenario where the aggressive trader triggers yesterday on the breakout of the flag here, right? Mm-hmm. So it breaks out, you trigger in yesterday. The question is, should you have got stopped out? The answer is an unmitigated no, because that stop loss needs to be underneath the 90 MA and underneath the base of the historical intraday price action, which would put it somewhere around the 87 level. Mm-hmm. And so that you don't love that candle, because it's like, ooh, you should have broken ran. You didn't. You came right back down. Well, again, stocks don't just go in a line up. They zig and zag on the way up, and they zig and then dive on the way down. And so here, this is a breakout. It's not a fake out as of yet, because we haven't broke out of any. We haven't broke the pattern. We haven't broke the trend. We just had a little volatility on the. Honestly, it gapped up on the futures market and it sold on the cash open. And that selling on the cash open was pretty quick, and then it stabilized. Mm-hmm. That's really what drove the price action. And so, number one, if the aggressive trigger did happen, that trade's still active and it's still working because support wasn't violated. Number two, if you are looking at this from a, hey, I was traveling yesterday and I didn't see any of that nonsense that happened at the cash open, but I still love the trend and I still love the pattern and I still am looking for a trade here. The question is now with the analysis, you have a pop and a drop here, right? You do. And so the question is, do you have to wait for the trigger above the high of yesterday's candle? Or can you find a level you're comfortable with triggering in above that? And this is a question that we traders get all the time. Do you use the wick or do you use the body? Where's the data point? And unfortunately, there's no quantitative way of determining that, because that it has some subjective analysis that is up to the trader to kind of determine them. And so for me, I like to have the data do the talking. And typically what I'll do is I'll drive down into that 30-minute chart. And again, 15-minute, 30-minute, 60-minute charts, they're all going to tell a little bit of the same story here. If you struggle with a lot of data, look at a 30 or a 60-minute chart. If you love the more data, you want to look at a little bit of a lower time frame to kind of understand some of these price movements. And so, for example, if I go all the way down to the 1 minute time frame here, right? Look at that. It was just a pop, hung out for about 15 minutes and dropped. It really was just a cash open volatility. And so the question is, where do you trigger based on the new information? And so do I have to wait for the close above 91.80 to trigger above 92, or can I find a level I'm more comfortable with? First and foremost, let me answer with a hypothetical scenario that most people don't love, but is accurate. I don't necessarily know yet. And the reason I say that is there might be some action over the next couple of days between 90 and 90 and a half. And that might clean up that trigger right here very quickly at around 90.60 versus the body at 90.40. That might clean that up really good, where it tells me exactly where that trigger is. Based on the information I have right this very second, I would say, let's see it close above 90 and let's rock above the high. That's what I would say. I would want, because of the fake out on Monday where it broke up, wiggled a little bit, came right back down, I would like to see a little bit of confirmation. Show me the market can withstand a close above this 90 level, because what we have not seen in this little consolidation, which I really like, I think it's consistent here. Look at the tops here. Look at the increasing support there. It's a really clean setup outside of this one candle yesterday. And so I do like it, but we haven't closed above 90. We've danced above 90. We tested above 90. We hung out for a minute or two and a cup of coffee above 90, but we haven't closed above 90 yet. And so I would like to see, and as you're seeing even today, it's working its way back up, and where it's starting to slow down a little bit right there around that 90 level. So, I do put a little bit more importance on a close above 90. And if the close above 90 happens, I do think that you have to consider that as confirmation, given the fact that we once again tested 90, came right back down, closed literally on the doji here. Closed at 90, opened at 90, closed at 89.99. It was like, I'm not even going to do it. I'm not even going to do it. I'm selling one share just to close underneath 90, because we're not going to do it. And so it hasn't had that ability yet. And so I would like to see a close above 90 here. And then I think you can rock and roll with whatever the high of the day is, because what I will say is, if this is only one data point, I'm not going to be overtly concerned about one data point when my analysis leads me to a confirmation above 90. And so, so for me, I'm going to discount that one data point until that data point becomes more important. And it tells me I should include it in my analysis, because I got all this evidence. I have that lawyer's mindset, right, Em?
Yep.
I have all this evidence, and evidence leads to conclusions. I have all this evidence at 90. I have all this evidence at 90. And then I got a dude throwing a fit and a temper tantrum 1 second of the day. And which one am I supposed to pay more attention to? The temper tantrum that lasted for 5 minutes, or the very consistent price action at 90? I'm always going to go to the consistency of cleanliness at a certain price point. And so I do think that, and again, it's not always the case you discount the wick, right? If the wick has a little bit more evidence than this one does over a 10, 15 minute time frame, I think maybe you take it into account a little bit. And if that wick coincides with some other historical evidence, I think you take that into account. But that wick at 91.80 was literally just on a pop on the futures market. And so I always think context matters around the wick versus the body. I always think context matters. And so context matters here. That was a futures market open that drove the price up over the weekend. The cash open then sold on Monday. And that was the only thing that transpired. And so you had that very, aggressive, pop that was based on very limited volume coming into the market. That's the futures market. Then when it comes down during the actual trading day, I think we got to look at the actual trading day, and that's the bodies. That's the combination of that, all of that analysis we talked at 90. And so when you're developing rules, and you know, Coach M, I was only there for about 10 minutes in your webinar last night because Coach Tim had to take off. And so I was like, well, they might need me. And then you guys started talking. I'm like, they don't need me. And so I just kind of took off, but I know kind of the topic you guys we're talking about, developing rules for, you know, traders, because we always start with, you know, okay, ATRs and percentage of rules off ATRs, right? Because that will match the trading rule against the volatility and the characteristics of the individual component you're looking at. And so ATRs are extremely valuable way of customizing rules to fit the volatility of individual stocks. And think about this like this. We were talking about the baby analogies earlier, Em. Think about what the ATR does to the volatility of a stock. If you have multiple children out there, okay, we all know that every kid is a little bit different. And if you try to teach, discipline, educate, whatever you're trying to do with your child, the exact same on every kid, it's not going to work. It's not going to work. Well, all these stocks, they're just a bunch of kids with a bunch of random personalities. Some are extremely consistent. Some are extremely boring. Some are extremely volatile and uncertain. And you know what? That's like kids. And so what the ATR does, and using ATRs in development of technical rules, it matches the rule with the volatility of the actual stock. And so ATRs can be a wonderful way, but what they cannot do is take away your subjective decision making on where you apply that rule, right? And so we use ATRs as a way to trigger off and make our rules consistent against, you know, different volatility levels on different stocks. But at the end of the day, you still are the trader that has to say, I'm comfortable triggering off 90 or I'm comfortable triggering off 91.80. And for me, I like the evidence leading to a conclusion of body versus wick. Well, where's the data points on this one? The data point at 91.80, the context around the futures market and understanding what was happening with energy yesterday, that brings it back down. But like I said on what I said on the market today, just because it came down doesn't mean it changed the pattern, doesn't mean it changed the characteristics of the market, doesn't mean it changed the trend. The only thing it did was drop after gap up on the futures market, and it came right back down within the range. So let's say we just eliminate this candle here. Just eliminate it. Let's cease it. It ceases from
the evidence.
Well, if you want me to remove this from the evidence, we're just going to do that. Okay. We're going to go ahead and we're going to remove this from the evidence.
It's irrelevant.
There you go. If you remove that from the evidence, okay, and now you're looking at this, it cleans this up a lot. It cleans it up a lot to where we're now just looking at the exact same thing we were looking at all last week. And what do we have? Still an increase in support going into that breakout against 90.
I absolutely love this. I love our little, mini mentorship, segments here on Queen's Court, because it really does help, you either confirm what you were thinking or give you a different perspective on what you were looking at, right? So I absolutely love this segment. Thank you very much, as always. Really appreciate that.
I wish I could just take my Epic pen and color up a whole bunch of different candles I don't like too. I wish I could just do that.
I also wish I could just use my Epic pen and just write, what my profits and losses were. I would never have any.
Let's just
see negative numbers.